Now, just in case you think that is too difficult to do day in and day out, and I'm not saying that it's easy, it can be easy to get vertigo. It takes training to be a pilot, to see. You need to take time to assess and have some situational awareness about you. You need to understand the gauges that are in front of you as a pilot. You may not be able to see the horizon, It may be a cloudy day. So you need to understand what your instruments are telling you. And if you don't trust them, then you don't trust them. You need to learn to trust them. And preferably you learn by flying or trading in simulation before you're trading your hard-earned money. We have a strategy. And let me turn this on for you. This particular strategy I just turned on is written by us, and it's called SMC GPS Double Play. And the strategy comes with modifications where, let me show you, you can decide counter trending, short, I set it as false, I'm not interested. Counter trend long, I can set it as false, not interested. Safety stop, if I need a little help, I'm concerned with losing some money, I might be prepared to trade more, then fine, I can leave that on. Look what happens here. Buy, 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 sell, buy, sell, buy, sell, buy, sell, buy, sell. Tons of orders, always trying to protect your flank. Probably trading more than I would want. And let's just see the performance on Friday. I'm interested only on Friday. Traded about 26 times since midnight. Made about $815 some odd dollars. Trading all that time. If I didn't need it, and I said, I can go with the trend. I don't need that safety stop. I could also set that as false. And watch what happens. Holy smokes, bagger. It went along back here. Right here. And guess what? It's still long. It's still long. Would you have the patience to put on a trade here? The courage? The capital? The knowledge to know? Now, could this trend have failed right here? Yeah, it could have. You would have made some money. It's not a guarantee. This one actually went short. You're probably pointing out, bagger, you went short right there for a trend, and it failed. Yeah, it did. It did. It did. But then it went long. So you see, folks, there is a little not market knowledge that you need, but just some basics. And then you have to sit back and think it through yourself. Yes, bagger is right or wrong. The market does go up and the market does go down. Go sideways sometimes. Yeah, it does. And it can do that for extended periods of time. What kind of a trader do I want to be? And how many times do I want to trade? And if you're looking at this and saying, well, bagger, I don't trade price charts and Rinkos and point and figure and all that. I don't want to do that. I want to trade time charts. Okay, let me show you something else that we have just for you. Okay, this is part 3 of a little series we're calling Is Your Trading Lost in the Woods? We hope it isn't. We hope it isn't, but occasionally and from time to time it might. And so that's where we kind of stop and we share with new people what we're about and how we try to help you through these woods. And then for our existing folks, it's just kind of a friendly reminder. You're looking at the swing machine. So if you're accustomed to trading time charts, and even if you're trading price charts, to use the time charts as a filter, as a barometer as to what everyone else is doing is a good thing, And this is a complete view, but this might be a little bit overwhelming. But before we leave this view, let me just share with you the Russell. And this happens to have the last information on Friday. Let's look at the 5-minute view of the Russell. It's long. It was long for 112 5-minute segments. It went long at 7:30 a.m. It was strong, trending up in pretty much all day. If you had entered at 7:30 and you still had the trade on, you'd be up 1,440. So if the swing machine was long on a 5-minute, which is very close, I would say it's a bigger view. Remember I talked about resolution? I promised to talk about resolution. It's a bigger view than a price chart. You don't want to go too big, right? You don't want to go on a monthly basis or a weekly basis. Probably don't even want to go on a daily basis if you're trading price charts. But you might want to take a look at your radar on a 5-minute and see what it's doing. And if it's pressuring down or it's trending down, then maybe you do want to be shorting. But if it's moving up and trending up, maybe you want to go with the trend if that's the style of trading you want to do. If this is too much, and people coming through YouTube don't know this, but our members do, many of our members have this very tool on their laptop. And you don't have to look at all these other markets. You can set this up for the one market that you trade. For instance, let's see here. I just want to insert this. I want to separate this here a little. I'm going to insert a couple of blank label rows here. Okay, let's just say that you want to trade a Renko chart on the Russell. Well, then maybe you just want to watch the 5-minute. And if the 5-minute is trending up, maybe you only want to take the buys on the Renko. Use it as a filter. But then you might say, well, Don, I don't trade necessarily the Renkos. I want to trade 15-minute. Okay. Maybe you want to look at your 15-minute chart, but look at the radar that you have on your screen for the Russell at the 60-minute. The 60-minute is long and went long on May 2nd at 11 p.m. Never dipped, strong, trending up, trending up. Why would you want to short the 15-minute, especially if it never showed up on the radar? Why do that? You know, we're not that far away. When we're talking about resolution, it's kind of like having binoculars at a football game, right? The binoculars have basically two styles of resolution. They have near focus, and then they have a distant focus. We see, 2-dimension, 3-dimension, but they have two focus. So if you're trading on a 15-minute, you want to make your decision off the 15-minute, maybe you want to take a look at the swing. What is the swing machine doing? It's measuring trend for us on the 60 and see what it's doing and maybe favor that direction. If it's dipping, you know what that means. If it's short, you know what that means, right? And then if you're trading Renkos, maybe the 5-minute. You could set these up. You could set up a workspace for your 5, just that much, so you're not overwhelmed of the 5 markets you want to trade, and establish your pre-shot routine. What's the 60 doing? 15. What's the Renko doing, but what's the 5 doing? You see, folks, for new people that are coming by, members to Stock Market Caddy, there is base members, and then we have level 2 members, and level 2 members have all of the tools that you have just seen and then some sitting on their computer. And we're constantly coming out with more and more. To do what? To help you identify trends and to help you identify counter trends. All you have to do is, I say all you have to do, is decide what kind of trader you want to be. Set up the tools so that they make sense to you. Only put things on the chart that make sense to you, that you understand how they work, and that they complement each other. If you put too much on a chart, the mind can only take in about 2 or 3 things. And if you put things that you are not familiar with and they conflict with each other, it's only going to make you more confused. And you won't be able to see the forest for the trees. You won't be able to see the trend, whether it be up or down. And that's not good. Okay? And understand what type of trader you are. Someone else may be a different style. You don't want to fight that. Okay? And my style of trading is my style of trading. Susan's style of trading is her style of trading. And we live with the results of that. But as long as you understand. Okay? So that's how we do it here at StockMarketCaddy.com in a nutshell. 3-part video as a reminder to our members and advanced members and newest members, and then also for YouTube folks that are coming through. These systems, the swing machine that you're looking at, they're monitoring much, much more than just 3. All you have to do, I say all you have to do, is if you want to be, a Renko trader, but if you didn't, you just say, hey, I just want to be a 15-minute. I want to decide on a 15-minute chart. So you could be looking at your 15-minute chart. And if you think it's generating a short, maybe you might want to see what the 60-minute is doing. If the 60-minute is long, strong, and you're about to short the 15-minute, what style of trade are you putting on? You're putting on a counter trend. Do you know where your exit is? Do you understand what you're doing? Okay. By the way, what is the 15-minute doing here? Is it even dipping? Is it shorting? So you might learn. So you might want to just set up, a workspace. Make it. Doesn't have to be as busy as this with everything there. We're able to pull out what we need. We want to show everybody, but it could be just, you make it as simple as it needs to be, market by market by market, so that you have 4 or 5. Again, if you're going to trade price charts, Renkos, I would probably think the 60-minute, even the 15-minute, is probably too far removed. When you're trading Renkos, you are down on the field. You are playing the market real time. I mean, you are right there. You are at the tip of the spear. So you might want to see what the trends are doing at a 5-minute level, which is someplace, right around the bench on a football field. We don't want to be on a daily chart, way up in the grandstands, looking down on the field, because there'd be too much going on. There's be too much room, for the to really get the resolution on the trade that you need. Okay, so if no one talks about it, we do fairly frequently. You got to get the right resolution. Okay, and if you're using a option trade and you're trading out weeks, well, then you don't need to see the 15-minute. You don't even need to see the 60-minute. You're looking at maybe a 4-hour, the smallest 4-hour, maybe looking at the daily and the weekly. Make sense? I hope so. If it doesn't, and you're a member, please talk to me. If you're a drive-by and you're interested and you want to talk to me, you want to challenge me, that's fine. I'll take your call. I'm a real person, trading my real bread for years. We do this second nature, but my phone is 813-758-8263. I'm Bagger Don at Stock Market Caddy. More than happy to talk with you and see if we can help lead you out of the woods. And occasionally, even here, sometimes we get a little case of vertigo, get a little tripped up, and we're reminded once again, the market can do anything at any given moment, at any given day. There is no Bible code. The question is what you have to decide where and at what level you're trading and how you're trading, and understanding the risk associated. The bigger the smaller the time frame should be, smaller the risk. The larger time frame is going to have a greater risk. But you have to have, maybe more patience with a 3 to 4 week trade or a 3 to 4 week investment. I'd call that almost an investment. Certainly a 1 to 2 year commitment. You can't then start watching your investment on a 15-minute chart. That would be nuts. I'm Bagadon, Stock Market Caddy. Feel free to give us a call. Better yet, feel free to join. Our initial membership is month to month, $99. And think about how much you've just learned now. Thank you.